Hello, this is Chuck Carnevale. I'm the Chuck in the Markets Up Chuck. And today's blog was titled Tech Truths. And I thought we'd take a look at technology because obviously technology really is the promise of the future. And people know that there's been some fortunes made in technology stocks, but there's also been a lot of money lost in tech, especially during the irrational exuberant period where a lot of companies appeared to be really attractive tech companies and really weren't companies at all. So I thought I'd look at a recent transaction where Hewlett-Packard bought 3Com, and that's to kind of help them enter some of the networking business and maybe compete more effectively against Cisco. But I wanted to take a look at these companies. If you look at Hewlett-Packard, which is a very large cap tech stock, there is an element of cyclicality to Hewlett-Packard's earnings. You can see from 1996, all the way through 2000, they had, pretty decent earnings growth. It wasn't always real strong. It was averaging, it was very inconsistent, rather cyclical. 6% growth one year, 20 the next, 1.4 the next, 2.7, then 16.9. Then, of course, they had this big drop in earnings, down 54%, and then down 36%. So, obviously there's a lot of cyclicality there, but if you look at this company since fiscal year 2002, Hewlett-Packard has really had some excellent growth going forward, even right through this recession, and you can see the stock prices track that. So Hewlett-Packard is becoming a growth stock, and in a minute here we'll look at it from a shorter term point of view, but I did want to make a point that even though it's a growth stock, there's a lot of cyclicality. If you look at Hewlett-Packard since 2002, which was the last year they had to drop in earnings, and from 2002, coming off of a real low base, they had an excellent 2003, and then some pretty consistent with some exceptional growth sprinkled in, results throughout even the Great Recession we had. And you can see the stock prices track that very nicely. So, since 2002, they've averaged about 20.2%. Again, there's still some cyclicality, but you are seeing a company that really does have great growth characteristics. Now, the company that Hewlett-Packard is buying is 3Com, and I do want you to notice that's given a big uptick, but I thought I'd take a 20-year picture of 3Com because you can see there's been some very strong periods of growth, some very bad periods where earnings fell, and then, of course, stock prices reacted all over the board. But if you really go and look at it since 2001, earnings have been non-existent, as you can see down here at the bottom of the chart, and stock price, of course, has just really kind of flatlined. It stayed in a very narrow trading range, or when I say narrow trading range, there was a lot of volatility in between in any one given year, but really on the long-term trend line, the stock really didn't go anywhere until Hewlett-Packard came along. Now, as I mentioned, stock price was really very flat. If you look from 2006, 7, and 8, the stock price did absolutely nothing. It's had this nice jump here now that Hewlett-Packard is buying them. But the point I want to make is they're all of a sudden, looking like they're going to start throwing off some, pretty strong earnings. And 3Com, could be a great addition to Hewlett-Packard as they try to compete with Cisco. Now, just like Hewlett-Packard, Cisco is kind of a poster child for the combination of earnings determined market price. You can see the long-term earnings growth of this company has been about 20%. There has been, quite a bit of cyclicality, more than most people think, but you would still argue this is a growth stock. But there's also been some real strong valuation issues. You can see where Cisco got ridiculously overpriced and came back to earnings. Again, it happened here. It happened here again. The stock did fall with earnings during the recession, but they are expected to recover. But the point I'm getting at is there is a long-term relationship to earnings and market price. And this, of course, is the 800-pound gorilla in networking and content delivery. And Hewlett-Packard, with their addition of 3Com, is looking to basically, compete more effectively with Cisco, who has dominated this industry for so long. But the point is, there's a lot of change, a lot of things going on in Hewlett-Packard. Again, you see the valuation issue, but you also see the relationship between earnings and market price to Hewlett-Packard, just like Cisco. So, the truth about tech is that, there can be a lot of growth in tech. It can also be very cyclical, and it's a very, very dynamic industry. So if you're ever going to invest in tech stocks, my advice is always do your homework and really, look at the research. But the key is try to forecast earnings, not stock price, because in the long run, that'll treat you better than trying to guess where stock price is going. This is Chuck Carnevale saying thanks for listening. Talk to you.